I build automated trading strategies. It's what I do, and it's made me a very profitable stock trader. It's just that though. It's just stocks like Nvidia, Tesla, Apple, to go through a couple of my favorite names. What I'm going to do in today's video is I'm going to take a look at converting some of my strategies to futures, seeing how they perform. We're going to analyze 3 charts in today's video. The first being an index future of the S&P 500. The next being an energy future, being crude oil, and the third and final being a precious metal future, being gold. We're going to load in multiple different strategies that I use every single day on stocks and convert them so that they work on futures, and then see how they perform. If you are at all interested in any of the strategies you see shown in today's video, they, along with over 80 other codes, are available for easy import on my website, daytradingstrategies.net. Link in the description down below. The first and most obvious difference between futures and stocks is how they are valued. In futures, there is something called a contract value. So unlike stocks, the actual cost to purchase a contract of this chart is not necessarily what is represented by the chart itself. We're looking at /ES here, being the E-mini S&P 500 index futures. The contract value of /ES is 50 times whatever the value of the S&P 500 index is currently trading at. The S&P index is currently trading at, let's call it 59,000. That makes these contracts $295,000 each. These are very expensive contracts. So the first thing we're going to do is we're going to switch the chart that we are comparing to from the E-minis to the micro E-minis. What this is, being /MES, by the way, what this is now, the contract value, instead of being 50 times, is now only 5 times. So each one of these contracts cost about $29,500, while the S&P is trading at $5,900. Now, the way that I have all of my strategies set up, vis-a-vis the first strategy we're going to be looking at today, is my reversal swing trading strategy. The way I have them all set up is that there is an input variable that you can adjust for your position size. The dollar amount that you want to enter in every trade that you take. What we're going to do for these tests is we're just going to get rid of that, and we're going to have every strategy buy a flat amount of contracts. Just the easiest and most fair way to compare the strategies against the futures charts. And it's something that we will need to do because, as you notice right now, I have my reversal strategy set to enter $5,000 positions. Well, when this chart is trading above 5,000, the strategy says it's buying, like it still shows the entrances and exits on the chart. But as you'll notice, the little 0 underneath the buy means it's not buying any contracts because it can't afford to. The contract itself costs more than $5,000. It can't afford to buy any of these. So we'll need to unbreak that first. One more caveat here. What I'm going to do is I'm going to set the global strategy settings to 10 contracts, because in my reversal strategy that we're looking at now, I allow up to 10 entry orders in the same direction, meaning as long as the buy condition is true, up to 10 times, I will scale into positions with this strategy. So I will allow 10 contracts per order other than this strategy, is what I should say. For this strategy, I'm going to allow 1 contract per order if I go ahead and do this, and then I'm going to have to go in and fix the code too. But so now I will be able to enter up to 10 contracts, whereas on some other strategies we're going to look at, we're just going to enter 10 contracts at a time because they don't scale in. Does that make sense? Did I explain that? We'll figure it out as we go. Let's go. And actually, I'll just show you all how I'm doing it. For those of you that already have access to my codes, or for those of you that maybe are about to and would like to apply them to futures, what I'm going to do. So the 4th parameter in the add order function is trade size. That is this position size divided by close. I'm simply going to delete that. Now, luckily, in this strategy, for whatever reason, I have laid out the names of the following parameters, but that is something you'll need to make sure you do, because once you are not throwing the parameters out in the same order, you need to have their names explicitly listed like that. So go ahead and hit apply, go ahead and back out. We should see now every time the strategy buys, it is entering one contract, two contracts, 3, 4, entering that many contracts while scaling in. One here, sell, one here, sell. Looks to be working as intended. So we got all the technicals out of the way. Let's talk shop, let's talk strategies, and let's talk about how they perform against a handful of these futures charts. So the first strategy we're going to be looking at is, of course, my reversal strategy. This strategy looks to buy dips on strength. If the stock is closing above the 200 SMA and below a certain RSI value, it begins scaling in up to 10 times. It then looks to exit on the first sign of strength out of that dip. This strategy targets a high win rate. You'll see here on /MES, win rate 81%, not bad. However, huge flaw here, the max drawdown percentage is 120%. It has a max drawdown of $8,000 while only profiting $6,600. Like, yes, it's up right now. Yes, it's up $6,600, but this does not look like a good strategy. You can't have a 120% max drawdown and could be considered a good strategy. Green strategies don't mean good. These numbers, this average trade and this max drawdown number really matter. I will counter though, this has only taken 16 trades. MES looks like it's only existed, at least it's only been plotted within Thinkorswim since May of 2019. It's only had 5 years and once again, 16 trades worth of data. It of course started off with a massive loss during COVID and it's been grinding back up ever since, but that huge max drawdown number is there. So for testing sakes, we're going to hop into the much more expensive contract value /ES. This is the same exact chart, right? They both track the S&P. This one has just existed since 1983, and you have 137 trades here. So you can start to build some sort of conclusive statistical evidence out of this many trades, way more than you can with 14 trades, right? And you'll notice, I mean, look, once again, you still have that same exact huge loss during COVID. Once again, it's still the same chart, just with a lot more data to look at. And 90% win rate looks really nice. The average trade is $2,000, which is awesome. The max drawdown is 29%, which is not too bad. So the reversal strategy looks to do okay on index futures. Next, hopping over to /CL, which is light sweet crude oil futures, so that we can get an energy future contract in here as well. 77% win rate, average trade $1,400, max drawdown 40%. That's not like amazing. Like, it really depends on your risk tolerance, right? Are you willing to target a win rate in P&L like this, but know you're risking 40% max drawdown with the strategy? I've traded strategies with worse max drawdowns than this, but I would like to stick under that. I'd like to be kind of under 30% is what I really target for my max drawdown. So maybe not amazing on this chart, but, you know, still profitable and not like ungodly, not like untradeable on light sweet crude oil futures is the reversal strategy. And finally, for this strategy, remember, we're going to cover more strategies, but for this strategy, the last chart, /GC, this is gold futures, and this looks sick. 86% win rate, $3,200 average trade, max drawdown at 9%. See, that's more like it. So now you kind of take the average across the 3 different sectors, right? We had an index, we had energy, and now we have precious metals. You had 29%, 40%, and 9%. I don't know exactly what that math comes out to, but it's definitely under 30% that I look for in a strategy. So I would probably be pretty happy trading this reversal strategy on futures charts moving forward. The second strategy we're going to look at in today's video is basically the exact opposite of the first strategy. The first strategy was a reversal strategy where I look to buy weakness, sell the first sign of strength. This is a continuation strategy where I am buying strength and then selling the first sign of weakness. You have much longer holds, you buy strength and you let it play all the way out. I have already adjusted the position size parameter for this strategy. Remember, we're going to have this strategy enter 10 contracts per trade because we were allowing the reversal strategy 1 contract, but to scale in up to 10 times. So to make it fair, this is going to do 10 contracts per trade, which means on average, it's going to trade a lot more capital, right? Because almost never does the reversal strategy actually scale in 10 times. It normally scales in, a couple and then gets the bounce and gets out. But for fairness sakes, we're going to give this one 10 contracts. You're going to notice much larger P&Ls once again, because this is trading way more money on average, but theoretically, it's trading the same exact available position size. Anyway, shut up, Trey. They just want to see the numbers. /ES, which once again, I would trade /MES, but since this has only existed, there's only 15 trades since whatever it was, 2019. We're just going to look at the ES chart. We have a win percentage. Oh, now I got to let it load back in. Win percentage of 53%. So this is going to be a much lower win percentage strategy, but our target with this strategy is a high reward to risk ratio. You can see $35,000 average win, $18,500 average loss, just shy of $10,000 average trade, 21% max drawdown. Not bad at all. Strategy looks to work pretty well on index futures. Next one we look at is crude oil, or light sweet crude oil to be exact. People will get mad at you if you don't lay out that this is light sweet crude oil. Anyway, first number I immediately jump to here is this has a max drawdown of 83%. 34% win rate, $2,200 average win is up $390,000. But you can see from this sort of peak in the P&L chart down here on the bottom, all the way back down here, kind of since oils entered this chop zone, this strategy has not performed well on it, giving it a very high max drawdown percentage. I would never consider trading this strategy on this chart or any other energy charts like this because of this max drawdown. It's just way too high. No matter how much money your strategy makes, it won't translate well to real life if the max drawdown percentage is this high. Once again, so important to look at this number when back testing. Everybody in the world can make a strategy that prints a very green total P&L. That's extremely easy to do. You have to look at this number and this number to learn how well it'll translate into the real world. So this continuation strategy, not great in the energy sector of futures. Let's go ahead and wrap it up with /GC being gold. Looking at precious metals, 39% win rate, $12,000 average trade. Nice. And a max drawdown of 24%. Okay. We're under that 30% again. Not bad. So I would trade it on this chart. 2 out of 3 for the continuation strategy. Obviously very profitable. That once again, that energy just had way too high of a max drawdown. Energy seems to be a little too choppy. You notice the gold chart has really nice follow through. Of course, the index chart has really nice follow through. Just really kind of runny types of charts, whereas his energy chart was very choppy. And that's sort of what destroys a strategy like this is this chop. So this is why you backtest. You learn the kind of sectors the strategy works in. Would trade to, would not trade this energy sector though. Like the video if you learned something or found this entertaining. Make sure you're subscribed if you would like to continue learning. And remember, if you would like to access the source code and the share links to easily import these strategies along with over 80 other codified custom strategy studies and scanners to find the top types of stocks to trade with these strategies, they're all available over on my website, daytradingstrategies.net. Click the link down below, click on our code, sign up today, and become a better trader immediately. With all that being said, I'll catch you on the next one.